Okay, so travel expenses as opposed to transportation expenses. So what's the difference here? As I mentioned, one of the differences is usually with transportation expenses, we're not talking about an overnight. You know, we're talking about daily type of travel, going between places. Travel expenses generally involve an overnight stay. One other difference is, so when there is an overnight stay involved, one of the benefits of that is, generally speaking, you get to include pretty much all of your expenses. So when we're talking about those transportation expenses on a day-to-day basis, if you are driving from your office to a client's office and you swing through the drive-thru to pick up lunch, that lunch is not deductible. Right? That is not included as a deductible expense. That's just your lunch. You would have eaten lunch anyway. However, for travel expenses, because it does involve an overnight, meals and lodging are also included in the expenses. So that's one additional benefit there. Meals, lodging, other incidental expenses, dry cleaning. So you can have your dry cleaning expenses while you're traveling. So everything would be deducted if the trip was entirely business related. So here we've got Alba, self-employed, has her primary business in New York City. She flew to Washington in the morning for a business meeting, then flew to Boston for an afternoon meeting with a client. She then took a late flight home that evening. This is not a travel expense, even though she flew all over the place. The expenses, the plane trips would be deductible because they're business related. Those would be transportation expenses. But because there wasn't an overnight involved, that would not be, they would be considered transportation expenses, not travel expenses, and therefore only those plane tickets would be deductible. None of her meals, none of her, any of that involved would be considered deductible. If a temporary work assignment can be expected to last less than a year, travel from the taxpayer's home to the work assignment, and the temporary living costs at the remote location are also deductible. So that client I was talking about who was up in North Dakota, we also were able to deduct his meals and his lodging expenses and all that stuff because it was a temporary work location. If it's expected to last longer than a year, then the position would be considered permanent. That tax home would then change. In that case, then those meals, lodging would be considered non-deductible personal living expenses. There is a reasonableness portion to this too. So lavish or extravagant expenditures for meals or lodging would not be allowable. So what oftentimes happens with regard to travel is people will combine personal components with it. So I've got a conference in Orlando. This would not be a good time to be going to Orlando, but I have a conference in Orlando and I want to take my kids to Disney World as well. So I decide that I'm gonna buy their plane tickets to get down there. I'm gonna register at the hotel that is having the conference. Conference is 3 days, but we're gonna stay a full week. So we're adding 4 days to it. Then we're gonna go to Disney World as well for those other days. Well, in that case, because the conference is 3 days, but we're staying a week, 7 days, that means that the trip is not predominantly business anymore. That means that my transportation costs for getting to the conference would be deductible. So my kids' plane tickets would not be deductible. The cost of the hotel would have to be apportioned between the business portion and the personal portion. And then the transportation costs while I'm in Orlando, like if I'm getting, the transportation, say I rented a car, any of those costs to get to Disney World, and that would not be deductible. Only the portion maybe where I got from the from the airport to the hotel would be considered deductible because I'm getting to the actual location of the conference. So whether or not it was primarily business related or primarily personal makes a difference. So in the case of if the trip was primarily business related, even if there was some personal vacation, then the taxpayer can deduct the transportation expenses. And actually in my example, I kind of said, I meant to say 4 days, because then it would be predominantly business, then I would get the transportation. But because if it's predominantly personal, I've got to take a portion of that plane ticket. I've got to apportion it between the two activities there. So here we've got Timothy, self-employed in North Carolina, personal financial advisor, flies to New York to visit his parents for 7 days. While in New York, he rents a car to meet with a business client one afternoon. The rental car and other costs associated with the business meeting are deductible, but the cost of the flight is not, because the trip was primarily personal in nature. So same facts, however, Timothy spends 5 days in New York conducting business, and then he drives to his parents' house for the weekend. Because the trip is primarily business, the transportation expenses are deductible, as well as the meals and lodging while he's there on business. But expenses incurred while visiting his parents would not be deductible in that case. There are some additional limitations for foreign business travel. A trip would be considered entirely for business if it meets one of these criteria. The taxpayer does not have substantial control over arranging the trip. So, I don't know, I'm trying to think of a scenario where you're self-employed. Let's say you're self-employed as an architect and there's a company in Germany that wants to fly you out to come and give them a proposal. They're making all of the arrangements and everything. So you don't have control really over arranging the trip in that case. Taxpayers outside the US no more than 7 consecutive days. Pay attention to this. I think you have a homework problem that involves this particular thing, and a lot of students have always had questions about that one. They get confused by it. So taxpayers outside the US no more than 7 consecutive days. Do not count the days on which the taxpayer leaves or returns. So travel days don't count, okay? So if it's no more than 7 consecutive days, but you don't count when they leave or return. Or taxpayer spends less than 25% of the time on personal activities. Again, the days on which, in this case, the days on which the trip began and ended are counted in this case, okay? And this is more favorable to the taxpayer because now 25% and you are increasing the denominator there. So you want it less than 25%. And you're increasing the denominator, so that means that by including those days. Also, or vacation is not a major consideration for the taxpayer. If one or more of those are met, the trip to the foreign country is considered primarily business. The taxpayer still has to allocate travel time between business days and non-business days. In order to calculate that, the deductible round-trip travel expenses, the taxpayer will multiply the total trip costs by the fraction of the number of business days to the total number of travel days outside of the United States. Weekends and holidays are considered business days. So when you're doing that problem, refer to this, okay? So again, you're gonna multiply the total trip costs by the fraction of business days to travel days outside of the United States. But what counts and what doesn't count. So weekends and holidays that intervene, so come in between, are considered business days. So they're included in that. If a vacation is taken beyond the place of business activities, the travel deduction is limited to those expenses to and from the business location. So in other words, you go to Paris on vacation, but then you're an architect and you take a day and you visit with a client. Those expenses of visiting with that client would be deductible, but the rest of the trip would not. Okay. Meals and entertainment. I don't know why they put entertainment in here. Entertainment expenses are not deductible at all. Meals, however, as I had mentioned before, associated with travel or associated with like clients, like if you take a client out for a meal, that would be considered a deductible business expense. However, you only get a 50% deduction for that. So if you spend $200 on your client meal, the deductible amount is $100. This is one of those book tax differences that I referred to, because it would be considered, the whole $200 would be considered an expense for financial accounting purposes, but only $100 is considered a deductible expense for tax purposes. So remember that 50%. I know you've got homework questions regarding that as well. So there was a time, so during COVID, they increased that to 100%. That was to try and encourage people, even though they didn't want people to go out, but it was trying to encourage people to go to restaurants, to spend money at restaurants because of how the economy was. It's a little contradictory, right? But that is no longer the case. So in 2023, we are back to 50%. So that's what you want to remember for your purposes here. Club dues membership fees you can't use them as a deduction. So your Costco membership for your business is not deductible. That's a membership fee. Country club fees, country club memberships. A lot of people would, join country clubs, and that's relatively new since 2017. People would join country clubs in order to, to network, or at least they'd call it that, to network, and then they would deduct the expense. That is no longer a deductible expense. You do have to keep track of the actual costs, or you still need to track the actual costs and keep records, but there's this federal per diem rate. They're called CONUS rates, continental United States. So if you don't want to use the actual, use those actual receipts, those actual expenses, there is like a daily rate for it for 2023. And this actually, it says the per diem rate is $157. That's across the country, but there are different rates for localities as well. So like the daily rate for New York is higher than the rate for Des Moines, obviously, because the costs are. You can see here, that means that the lodging, $98. Again, if you stay at a place that's $98, you probably want to make sure you bring one of those glow lights to look at it. Just looking to see what's there. $59 for meals and incidentals is your limit there. So you don't have to, it just makes it easier, again, if you don't want to have to keep track of those things. But you do have to keep track of, you still have to keep track of your lodging and have those receipts. So the difference between transportation expenses and travel expenses, just to kind of recap, transportation expenses involve those expenses that you incur just on a 24-hour period, essentially a work day type of situation. It doesn't involve an overnight. You do not get meals or lodging or anything like that included in it. You can use actual expenses for the vehicle expenses. You can use actual expenses versus the per mileage rate, which that mileage rate is 65.5 cents a mile. And then the travel expenses do involve a overnight stay. You can include the meals, which are at 50% of the actual cost, and the lodging and the transportation cost, but there are some differences if you have a personal component to those trips, and if it's a foreign trip as well. Okay? Questions? You guys are all whipped? Not now. No, you'll have questions at 2 in the morning when you're doing your homework.